Mehta is also with us on the show. Dipan, hi. Just let's begin by discussing the auto sector because this time around the commentary has been skewed a lot more towards rural. Is this something which has now become an investable idea as well? Would you take heart from the fact and believe in the rural recovery story?
Yeah, good afternoon, and thank you for having me on your show. See, I think the auto story is now almost 2 or 3 years old. Post the pandemic, we have seen a very good revival in volumes across the board, and even the average selling price also for the auto companies has gone up significantly. And this is across the board, with the exception of tractors, where there have been many cycles, but two-wheelers, four-wheelers have done extremely well, and new model launches also have been a key highlight for the industry. Going forward, I think we should expect subdued growth rates. I think if you look at what Maruti had to say, that they expect a 2% volume growth for the passenger car segment. And also, I think high base effect will come into place. So these are absolutely complete blue sky scenario for the auto industry, but there are a lot of headwinds coming in. The base effect will mean that there'll be lower volume growth rates, and even the average selling price, it seems to be flattening out, as is evident from the Q4 numbers. And lastly, I think that new model launches also have more or less kind of run their course, and whatever backlog of deliveries were there, those also, that benefit also is no longer there. So I would say a little bit challenging times for auto sector going ahead. And from that point of view, I'd like to be a bit cautious. But M&M in particular could be an outperformer because of their exposure to agriculture. And if this monsoon season turns out to be as good as the weather people have been saying, then it could be a very good year for M&M.
Yeah, absolutely. And it's reflective in the stock price as well, which is pretty much around an all-time high as we speak right now. And Dipan, hi afternoon. That's pretty much the case with ABB Siemens as well, right? Cap goods also are the ones consistent earnings growth. And yeah, let's not even talk about the valuations that they quote at.
Yeah, every time the result comes of ABB and Siemens, I just look at the trailing 12-month PE ratio and I'm just astonished. They both trade at 100 plus PE multiple. And not even Nvidia trades at 100 plus P multiple, nor does Amazon, Microsoft, Apple. I don't understand, how these stocks can trade at these P multiples and how can we justify buying into them. End of the day, they are cyclical businesses. Sure, they have an upswing just now because the capex cycle is on the upswing. But look, I've been tracking these companies for the last 30 years, and there are long periods, 3, 4 years, where the earnings go nowhere. They are declining also. So how can you pay such a high valuation for a cyclical business such as that of ABB or Siemens for that matter?
Yeah, that's a question we actually also posed to Renubit Pugalia of IFL Securities, whether there's value in any of the stock and whether somebody should hazard a buy right now. Listen to her view coming in. She believes that perhaps the likes of BEL, L&T provide a better risk reward than ABB Siemens. Listen in.
I think Siemens energy demerger was expected. There were announcements to this regard earlier last year. And more importantly, the last transaction which the Indian entity had proposed for LV Motors, there was a given valuation which minority holders turned down. In this case, the valuations are open. It's more of an open market discovery. It's a vertical demerger followed by listing. So to that extent, it is very fair for both minority and other shareholders also of the Siemens company in terms of open to them in terms of realizing the value and the potential of the earnings visibility that we see in this name. And today, given the outlook that is there for the global grid equipment market, not just India, but even developed countries and overseas, I think the portfolio looks extremely attractive with new capex across business segments, including new technology products like Blue GIS and other solutions. So I think to that extent, Siemens Energy looks an attractive bet. And until demerger and listing date, we may continue to see Siemens Limited, the listed company, trading at slightly more rich valuations till the record date approaches.
Okay, so that was about industrials, but chemicals is the space which is coming back as well. Though there are mixed views coming in, the UPL management commentary suggested that FY25 is going to be another year of a bit of a sluggishness and recovery is expected in FY25. But then UBS analysts believe that it's the right time to buy these stocks, at least for that recovery. And they initiated coverage today on the likes of PI Industries, Naveen Fluorine with the buy rating and substantial upside from the current market price. Dipan, what do you think where we are in the entire chemical cycle? Is this the right time to buy?
No, I don't think so. And the thing about chemicals is that, the street really started giving very high valuation multiples to these companies, thinking that they would be structural growth stories. And this entire China plus one investment theme gained a lot of popularity. But, a year and a half down the line, we have seen a lot of cyclicality in their earnings. And Chinese exports also have come back very strongly. And this China plus one strategy is a much, much longer play, 5 years, 10 years, who knows? So from that point of view, paying such high valuations for businesses which are essentially commodity type businesses, sure, they do have long-term supply contracts, but there are risk factors as we've seen in Aarti Industries. So looking at the entire picture, I'm not that positive on chemicals. It's a difficult sector to track also because volume of sales is not transparently known immediately month after month, and pricing also keeps on fluctuating. And if these stocks are trading at P multiples of anywhere from 30 to 50, 60 times, that isn't really an appealing story. So I would just like to put a pass on the entire specialty chemical basket. But you did mention about PI Industries. So that's a different, business model altogether, where they are doing contract manufacturing for agrochemical companies, the large ones. And there, I think there is high degree of visibility and stability of earnings and business volume. So that certainly is a stock worth watching. As a disclosure, we and our clients are invested in it. And another segment within the chemical space, which will be very, very interesting, is the agrochemical place, like companies like Dhanuka Chemicals, Dhanuka Pesticides, Rallies India, and even PI Industries, because that's a domestic business as well. If the monsoons are good and if the crop output is great, then typically towards that end of the monsoon season, we see a very good big uptick as far as pesticides and agrochemicals are concerned. And these companies are trading at reasonable valuations, and they could surprise on the earnings front when we look at their September or December quarter earnings.
Dipan, the other thing is, of course, many are sitting on the sidelines, keeping the powder dry for the event uncertainty. That's, the election outcome to get done with. What is it that you buy then after that? If indeed it's a continuity of the current regime, which seems to be the case.
I think that if the government comes back with a stable majority, then the best stocks to buy would be the defense stock, PSUs. It could be PSU banks, other PSU engineering companies. I still feel that in our portfolios and what our portfolios I see for a lot of clients, people are underweight public sector enterprises. And that's one segment that one should look at. If there's a deeper correction, then that's one segment that one should try and load up on. Apart from that, I think banks also are getting into a nice buy zone. And I'm keeping an eye on the inflation rate. And if there is by chance liquidity tends to ease, I think liquidity will ease before the RBI decides to cut interest rates. Even a sort of mild easing of liquidity will lead to a material improvement in the net interest margins for a whole host of banks and NBFCs. And that will support their volume growth and profitability as well. And still, I think the NPA cycle is holding up pretty well. So I think that these are the two segments which look interesting. Other than that, I think so far, if you look at the earnings season, I think pharma companies have also come out with very good set of numbers. And I don't know how long this kind of price discipline in the US generic market will last. But if there are certain structural changes over there, or if the price erosion has got curtailed, then I do feel that that's a segment also where investors can get overweight on.
Full of that space and keep an eye out on those factors. But let's take it across to Ansh to get a gist of which are the big price volume buzzers in the trading session today. Ansh?
Right, so Oberoi Realty will be the first stock in focus as the stock has given a breakout from its cup and handle chart pattern, touching record high level as well. Also, the breakout was backed by volume of over 10 times its average trading volume of last 10 session. Also, the stock trades above its key DMA level, which adds to the optimism in the stock. Apart from this, Colgate will also be in focus as the stock has actually given a breakdown from its head and shoulder chart pattern with volume of over 2 times its average trading volume of last 10 session, showing very negative sign in the stock. stock. Lastly, ITI will be in focus as the stock has actually given a breakout from its downward sloping resistance trend line. Also, it has surpassed over its 100 DMA level, and the breakout is backed by volume of over 18 times its average trading volume of last 10 sessions, showing very strong participation in today's breakout. Also, if we see the stock on a weekly chart, then the stock seems to have formed a bullish engulfing candlestick pattern, which usually indicates a potential reversal in trend on upside. So keep an eye on these stocks.
Right. Okay, those are some of the volume buzzers that you're currently seeing in trade. And, you know, it's really a selected list out there. Cipla is holding out well, PFC, Coal India, CanBank, Siemens, that's where your gainers are. And of course, M&M, Bharti as well, holding out pretty strongly. L&T is not looking all that bad at all as well. But Dipan, what's been your read-through from earnings so far as to sectors where you think growth is going to be a challenge from here onwards, be it a base case scenario or a slowdown per se?
That's a tough one to answer. Let the earnings season get over and done with. But so far, there are lots of hits and misses. It's a very mixed earnings season. And even within the sectors, we are seeing very mixed signals. Like look at cement, Ultratech, Shree Cement, ACC did exceptionally well, but JK Cement, some of the other companies have disappointed. And I think we are seeing that pattern across the board. When it comes to banks, NBFCs also, there have been outliers over there, but broadly there have been a lot of disappointments as well. So it's a very mixed picture, and I'm not completely coming out of the earnings season absolutely gung-ho. It's just that earnings have come as per street expectations. A lot of it has got priced in, and there are very few companies which I'm seeing just now, rather very few, where I feel that now this earning is really a buy trigger for me, and something new has emerged, something which is undiscounted is now visible, and maybe that's a stock now which can really be an outperformer. And when you look at the valuations, they're just like absolutely mind-boggling valuations. We spoke about Siemens and ABB, but you go across the board within the consumption space, within cement, steel, automobiles, every sector we are seeing valuation multiples which are at record levels, significantly higher than what the average valuations have been in the past. And it's not that the earnings are so visible and that they'll sustain these kind of valuation multiples. So an interest is not going to come off that easily over the next several months or so, because economic activity is holding up well. So when you look at the entire picture, I fail to understand what could be that one real buy trigger which can take the market up by 10% from here. That's one thing which is perplexing, but there could be a few triggers which can take the market down by 10%. And the most important risk factor, of course, is the election outcome.
Something you have to watch out for, but other than that, earnings season hasn't really delivered anything major. That's the verdict coming up from Dipan. But the other thing that us Mumbaikars are watching out for is the Prime Minister's visit. He's expected to land anytime in Mumbai now, and he's going to visit the Ghatkopar area and is going to hold some rallies there. Let's take it across to Aishwarya, who's right there on the ground. Aishwarya, tell us what's the latest, what's the traffic situation like, how's the excitement within the BJP cadre?
Well, I'm at the LBS road currently, right at the beginning of this particular route that Prime Minister Narendra Modi will be arriving very, very soon. By around 4:45, he will be in Kalyan, and soon after that, he will also be coming to Ghatkopar. We are currently at Ghatkopar West. This is just the start of the route from where Prime Minister Narendra Modi will be conducting his rally. Going ahead, as you can see, a lot of police force has also been accommodated here for security purpose, 5,000 to 6,000 of them. And during his rally, of course, he has decided to go to Dindori, Kalyan as well as Ghatkopar for reasons, because these are the key constituencies for the Maharashtra elections, phase 5, which starts on 20th of May. And that is one thing that he needs to address during this rally. Shrikant Shinde, who is Eknath Shinde's son, stands from the Kalyan constituency, and he will be addressing the public at that point when he reaches around 4:45 at that particular public meeting. So overall, the two clans, which is the Mahavikas Aghadi as well as the Mahayuti, these two clans will be battling for Maharashtra's elections, and we'll see who gets the seat and what's in the fate of the state of Maharashtra.
Okay, we'll wait by and see that. 20th May is the polling date for most of the Mumbai region. So let's see till then what kind of changes they can kind of bring in the mindset. But time now to get the BTST trades from our chartist. Sony, tell us which are the stocks that you would recommend as a BTST or STBT?
The first BTST would be in Balakrishna Industry. We've seen a good breakout above 2500 level today. So from current levels, one can buy keeping a stop loss of 2460 and a target of 2600, 2620 can be seen with a positive view. There's also a good range breakout in Balakrishna on daily charts. The second pick would be in Power Grid. Power Grid, we've seen it sustaining very strongly above 300. That's a very strong support. Earlier, it had made a high of 318, 319 from where it had seen some profit booking. It is about to retest these levels. So from current levels, one can buy, keeping a stop loss of 300 and a target of 330 can be seen in Power Grid.
And what about your BTST trades?
So BEL is something which is looking attractive at 233. The stock is on the verge of a breakout, more on the hourly charts. So would suggest a target of 244, stop loss to be kept at 228. And Balakrishna Industries is something which is given a flag pattern breakout as well as a consolidative breakout on the daily charts. Would suggest a buy with 2650 as a target, stop loss at 2435.
Okay, the other set of numbers that we are watching out for is Dixon Tech today. Of course, not a nifty company or anything, but a large mid-cap which is very, very closely tracked. Sirma SGS had come out with its earnings and they were rather disappointing. 2-3 days on the trot. That stock continued to be on the downside today as well. It's not doing much. Do you think, Dipan, this entire space of EMS or the electronic manufacturing has been overheated now and one should perhaps look at trimming positions?
Yeah, of course. I think that from a valuation perspective, you can see that they are quite overvalued at this point of time. But so long as the numbers keep coming, investors will not sell Dixon or some of the other companies. I thought that CNDLM also came with a good set of numbers, and some of the valuation multiple did get compressed because of that. But Sirma SGS was a disappointment, although they say it's transient. So yeah, it's an emerging sector. It's a nice investment theme. And if you get it at the right price, then you can ride it for 3-4 years because the business is gradually scaling up pretty well. And it's a scalable business also. And it's a trend which is gaining a lot of traction, which means that more and more companies are looking at outsourcing their manufacturing. It's a new trend. So therefore, I think it's got that space and runway for growth. But it's just that, valuations are really compelling. Like Dixon would go at, I don't know what, 70, 80 times P multiple. I've just lost track about that. And same is true with Sirma SGS as well as CNDLM. I think we are seeing a mild reduction in the P multiple. That stock looks interesting and is on our watch list.
Right, okay, that's the view coming in on some of the EMS plays right now. But just taking a look at, some of the other buzzers in trade. Colgate, of course, has had it harsh today. There's RT Industries, ICICI Pru, MGL, Bosch. They're all the drags in today's trading session. I want to bring out some of the other losers too. AU Small Finance, Berger Paints, Asian Paints. These are also your pressure points as we speak right now. Sony, how soon before we see a material recovery play out, especially for Asian Paints? A lot of factors at play out here, and I'm going to keep the earnings aside, but that seems to be rubbing off on the entire sector too.
See, if you look at the sort of a medium-term picture from here, there is a very strong resistance of 3,000, which it was unable to cross, earlier in May series. If we, just on the downside, of course, it's not looking very strong to protect the downside support, which is around 2750 from current levels. If it breaks 2750, it can retest the lower levels of 2600. So that's quite a broad range. Any upside, any confirmed upside can only be seen if it's able to cross 3000, which may take some time. And only above that, you can see it bouncing back towards, 3300 odd levels. I think that's the level to watch out for in the medium term play.
Point taken. So that's the view coming in on Asian Paints. But in the meantime, we did speak with a whole host of managements today as well, and we'll try and play some sound bites for you in terms of what the takeaways were for the earnings as well. Because overall, as even Dipan was pointing out, it hasn't been a very, very exciting one, barring industrials and maybe some of the FMCG names that surprised. There was no other pocket which has actually managed to bring in a big outperformance. Before I play those bites, let me toss it to Kunal as well. Kunal, within FMCG, what still looks good? Because Citi, for instance, has come out with a pair trade today. They're talking about a long on Britannia and perhaps an underperform on Dabur. Is that something which is concurred by the chart views also?
Yeah, I think not a short on Dabur, but I would probably believe that the stock could be a little bit more sideways over the near term and then try and pick up pace. It's still forming a bullish flag formation on the daily charts. In fact, Dabur, HUL, both of these names, they've managed to come back and retest their key short-term moving averages, and they've not been able to retrace the entire gains for themselves. So I think that's a sign that maybe over the next couple of days you might see these stocks consolidating, but then getting ready for a breakout potentially above their respective 200-day moving averages for both of these names. Britannia, of course, has been one of the top performing names, but I believe that I think there's one chart which is still showing signs of weakness, and that I think is Nestle. That's a chart which is still looking very weak on the short term basis. So probably Dabur and HUL could be the potential candidates of outperformers, but Nestle could remain an underperformer.
But Kunal, what about metals? Does that look like a sustainable move?
Yeah, absolutely. I am very bullish on metals. In fact, many of the stocks today, even though these stocks have opened with a gap up and seen a mild retracement, but the kind of a breakout which we're seeing for many of the stocks, JSPL, Hindalco, JSW Steel yesterday came back towards closing towards the 900 odd levels. Tata Steel is seen almost a V-shaped recovery. SAIL is something which I think is coming back towards a multi-year high around the 170 odd mark. So I think all of those charts are poised up pretty well. And the fact that these stocks are not losing their beta characteristic even in the market gets into a correction, then a consolidation. So I think that's also an interesting sign. So I would be bullish on the metal pack. SAIL, Tata Steel would be the top candidates from the pack, and from the commodity space as such, I think Hindustan Copper and Nalco are the other ones.
Point taken. Dipan, before we let you go, a quick word on these AC companies. Today we were speaking with Blue Star and they said that the growth rate this summer is expected to be 30 to 40% versus the initial estimate of 25 to 30%. And clearly, there's a rapid growth in penetration, and the next 5 to 6 years are going to be very good for all of these AC majors. Is there any name that you still would like to buy? Voltas, Blue Star, Havells and the others?
A lot of it got discounted in these companies as well. But not a AC company, but an air cooler company, Symphony. I think have a look at that company, although we have not yet recommended it or nor do we have any investment interest in it. But it's a solid company. It's had its challenges last several years or so. But with this particular summer season, I think they could really surprise on what they can offer in terms of potential upsides. And valuations are still not out of whack. It is, I think, perhaps cheaper than all the air conditioning companies, including Havells. So I would say that there's scope for P's to get re-rated over there. And despite so much of competition coming within the sector, we are seeing that it's been able to maintain and hold its market share purely on account of its innovations, mild technology improvements, and its brand and distribution network.
Okay, Dipan, on that note, we let you go. In fact, Sony as well as Kunal, thanks so much for making time and being with us for this last hour of trading session.
If you like this video, then like, share and subscribe to ET Now.